Hey, what's up, everyone? Welcome back to my world of stocks. I'm actually feeling a bit under the weather, so I apologize if I sound a little off in today's video, but I'm going to do my best to get through it. I took some medicine, so hopefully that gets me through it. Anyway, what we're here to talk about today, as you guys know, many AI stocks have been on an absolute tear this year, with lots of hype and attention fueling them to new record highs. However, what if I was to tell you that three of my favorite AI stocks for the future have actually gone down this year and are still going through gigantic multi-year crashes? Well, in today's video, I'm sharing with you my three favorite AI sleeper stocks that most people are actually staying away from, but that I feel have giant future potential and are worth keeping a close eye on. Now, they are much higher risk, so please keep that in mind. You're not going to get AI stocks actually down in price this year without having to take on significant risk on them, or at least having certain structural issues within their business or other things going on with them. You're just not going to get them at lower prices when most AI stocks that are doing well are taking off and skyrocketing in price. But long term, I do feel that these stocks in particular do have a lot of rebound potential, at least in my opinion. And so that's what I want to talk to you about in today's video. And I hope you guys enjoy the video for that. And if you ever want to see more videos like this where I take a little bit more of a chance, show you some stocks that, might be a little bit riskier, but hopefully you understand where I'm coming from. These are stocks that I would only kind of keep very small positions of myself because of the risk, but there is, again, a lot of future potential. So, if you enjoy those kind of videos, you want to see more of that, you can hit the like button, you can subscribe to my channel. It helps keep my channel alive, lets me know you want to see more videos like this, and it means a lot to me. So thank you so much for that support. All right, let's not waste any time. Let's go ahead and jump into this list of three AI sleeper stocks. So starting with AI sleeper stock number one, I'm going with Baidu, ticker symbol BIDU, which is not only negative this year, but is also down over 30% in the past decade and closer to 70% down from the very top. And look, considering how much AI stocks have been on a tear this year, I think it's pretty freaking crazy that Baidu is still so heavily beaten down like this when they're actually one of the absolute largest pure plays on artificial intelligence out there. In fact, many people don't even know this, but Baidu actually holds the most AI patents in the entire world, even ahead of other giants like Google, Nvidia, Microsoft, and more. And a large reason for that dedication to AI from them is because of the insane amounts of data that they're able to collect, which they can then use to fuel their AI platforms, not only holding more than half of the entire search engine market share in China, but also being one of the top four largest digital advertisers there too. And because of this dominance, Baidu has often been referred to as the Google of China, which of course is a welcomed comparison since Google is one of the most talked about AI stocks in the world. But hey, that comparison, in my opinion, is also a pretty fair one because, like Google, Baidu also has a giant cloud business. In fact, they hold number one market share in cloud AI in China. How crazy is that? Now, their Ernie platform is also ranked as the number one Chinese AI chatbot and large language model in the country there, similarly to Google with Gemini. And they even have a growing autonomous driving division called Apollo, which is similar to Google's Waymo, which, by the way, that was in the headlines recently. They've shown impressive leadership there, not only being the first robotaxi service to receive approval in China, but it's also the first 24/7 service. And most recently, they've even been hired by none other than Tesla to help them with their full self-driving and eventual robotaxi launch in the country as well. That's a huge deal, guys, because most analysts agree that the robotaxi market will be worth trillions of dollars in the future, with China likely being the largest market for them, just like they are for EVs, among other things too. And meanwhile, though, Baidu already has a very strong and profitable business, and while it can sometimes be a bit volatile because of the current state of the Chinese economy, well, we have at least seen significant improvements to both their operating and free cash flows over the past few years, growing by billions of yuan each time. Anyway, the point is that if it weren't for being a Chinese stock that inherently carries significant risk for that fact alone, well, Baidu would probably be a soaring stock, perhaps reaching new all-time highs every year, just like Google and other American peers. But instead, what we've seen is a beaten down AI leader with an insanely cheap valuation that trades over 27% cheaper than the sector on a forward PE basis, over 42% cheaper than their own 5-year average, and over 63% cheaper than the sector on a PEG basis as well. Look, for me, that's cheap enough to warrant the risk. And so I've been a buyer in recent years, and I'll probably continue to be one in small amounts going forward. I do often worry about their ties to China and the risk that comes with that, but as a very small position in my portfolio with not too much influence over it, I just think that it's worth the gamble, because without that risk that it carries, there's no way in heck that I would ever get an AI leader like this at such a low price. So you got to take the good with the bad, in my opinion. Anyway, moving on to the next two stocks. Well, we're going to be increasing the risk a bit. And I know, how can it get, even riskier than already having a Chinese stock? Well, that's because Baidu is at least profitable, while these other two are not quite that. However, long term, I do think that there's giant potential for them. Now, one of them I already own myself, and the other I do not have a position in quite yet. But let's start first with the one that I do already own a very small piece of, and that is the AI specialist that actually has AI right in their name and their ticker symbol. And that's, of course, C3.ai, ticker symbol AI. It's one of my newest little tiny positions that I've just started building up. It's one that I actually sometimes refer to them as kind of like the riskier, kind of smaller brother to Palantir, which I know sounds a little weird, but I feel that they do share some similarities. As just like Palantir, C3 is also primarily an AI software specialist that helps other businesses and even government entities manage their data using the power of AI to run better and more efficiently across a number of different industries like manufacturing, energy, utilities, telecom, transportation, financial services, defense, intelligence, healthcare, and more. To give you just a few examples here, they helped a Fortune 200 and $30 billion global manufacturing company optimize their inventory, resulting in as much as a 52% reduction on inventory holding costs, saving millions of dollars. They also helped a Fortune 500 utility reduce the transformer failures by almost 50% with a 98% accuracy rate in detecting future failure events, resulting in $800,000 of costs avoided from early detection. They helped a pharmaceutical giant improve their drug manufacturing and performance, resulting in a 60% reduction in maintenance costs and a 90% reduction in false positive alerts. And they're even using generative AI now too, which of course has been all the buzz these past couple years, where they were able to deploy their entire platform within 2 days and immediately integrate it with all of the company's data so that employees can now find the information required over 90% faster, with also around a 90% accuracy rate. Anyway, the reason why C3 has always caught my eye is because so much of this can be brought to an organization at a software level, which allows C3 to deploy the entire platform and get actionable results within weeks and months rather than years. And that's a huge selling point to giant organizations that are always moving fast, but are also looking to cut costs and improve efficiencies at scale as much as possible. Because when you have such large entities like this with so many assets, so many employees, so many processes running all the time, well, if you can make everything for them run better at scale, you're going to get huge results at those sizes. And some of the savings that C3 has been able to provide to companies has been in the hundreds of millions of dollars at times, and that's gigantic, guys. It's why you always really hear so many companies now talking about AI in all of their earnings calls. Listen to any earnings call out there. You're always going to hear management talking about AI now. It's like the most used buzzword, because they love to show off to analysts and investors how much better the company is running, how much money they're saving by using AI, and it just gets some attention, and it's what everybody loves to hear from them. And so again, because of that, a company like C3 who can do that for you very easily, quickly at a software level, well, that's going to be very valuable to the entire global economy. In fact, it's estimated that the AI software market alone will surpass $1 trillion over the next decade, according to Precedence Research, with many other analysts projecting even more. But to give you some context of how large of an opportunity this would be for C3, well, they barely did just over a quarter of only 1 billion in sales in all of last year. So there's giant room there for expansion. And yet the stock price has actually cratered into the ground, not only negative year to date by almost 20%, but since IPOing right at the end of 2020, well, the stock has lost more than 80% of its total value. How crazy is that? Now, obviously, there's several reasons for that, as the economy has been deteriorating ever since, and especially in a rising rate environment where profits become even more important. Well, C3's heavy losses year after year have caused major concerns among investors, which I think are totally warranted. On top of which, their slowdown in revenue growth to below 20% isn't necessarily helping their case. However, it does look like the business is at least re-accelerating now, with EPS growth expected to be above 50% over the next 5 years on average too. And at these levels, we're now talking about an EV to sales ratio below 7, which, mind you, I don't even care about the valuation based on sales. I think profitability could soar in the future and leave a cheap valuation based on earnings because of the software-like margins that they can benefit from at scale. And again, that's what really excites me about this company. Like I said, it is a risky one. It's bleeding money, and the economic environment isn't making me feel any better about any of that. But at these levels, as just a very tiny position to start out with, I'm okay taking this bet here. Time will tell where it goes, but my hope is that their business and their services are just too valuable to enterprises and other entities to where they can't really disappear. Hopefully that's the idea, but instead they actually grow larger. And we'll see if that actually turns out to be the case, but I think it's definitely an interesting sleeper stock for AI. Anyway, moving on to stock number 3 now. This is the one that I do not own yet myself. However, I may buy a small amount of it very soon because it's looking super tempting at this point. And this is actually an AI biotech stock that has been falling hard, and that is Recursion Pharmaceuticals, ticker symbol RXRX, which, by the way, is actually one of Cathie Wood's favorite stocks. In fact, in her biotech ETF, it's currently the 3rd largest holding at over $77 million, and she's been buying even more of it throughout this year. I know she's not the most popular figure out there, but some people do like to look at what stocks she's investing in, and yeah, she's been buying a lot of this one, which does make some sense considering how much it's down. In fact, it was actually up almost double its value at one point, right along with all the other A stocks soaring earlier this year. But ever since, it has actually corrected back down, leaving it still negative by a double-digit percent this year and down almost 80% from its all-time high. That's a huge crash, which, like C3, this also has a lot to do with heavy losses during a very challenging macro environment for any unprofitable company, really, except that in the case of RX, well, they're not just unprofitable, guys, but they lose way more money than they even generate in sales, and that's because they really haven't been selling their own medical treatments yet, as all of them are still seeking regulatory approval. And the reason for that is because this is still a relatively young company that is aiming to disrupt much of the giant pharmaceuticals market by using the power of artificial intelligence to not only discover new treatments, but also do it faster and help lower costs and reduce the time that it takes to research, identify, and develop those treatments too. And this, of course, is a huge deal because the legacy format that giant drug makers have historically used can be an extremely slow process, with many of the drugs tested on humans never even reaching regulatory approval. But RX believes that their AI-powered operating system can change all of that by allowing them to test millions of clinical compound interactions with the human body quickly to discover new methods, improve efficiency, and expedite the entire process, which after striking a deal with Tempest, well, Recursion now has over 50 petabytes of biological, chemical, and health-related data that is currently feeding their AI platform too. And while none of their own treatments have yet to complete phase 3 trials, well, they are at least trying to subsidize much of that work by licensing out their platform to other pharmaceutical companies, which could be huge in the future. And they've done that with drug giants like Roche and Bayer, who are using it to research new drug treatments related to neuroscience and even cancer. In fact, Recursion's AI platform has gained so much notoriety in recent years that even the AI specialist NVIDIA has invested tens of millions of dollars into the company and is also collaborating with them to add another 500 NVIDIA GPUs to their supercomputer, which will increase its computational capacity by 4 times larger, making it one of the top 50 most powerful supercomputers in the entire world. And get this, guys, the most powerful one to be owned by a biotech company as well. That's pretty freaking crazy. And so because of all of this long term, I just think that there's plenty of potential here as a speculative bet on the future of AI in healthcare, which is hard to put a precise value on based on current financials. But for what it's worth, the current share price is at least significantly lower than even the lowest analyst price targets on Yahoo Finance at its current level, which again, I don't currently own the stock myself yet. It's always scared me a little bit too much with those giant losses, but I feel that as a very small bet, just getting a little bit of exposure with it, I think I am ready to maybe start dipping my toes into this stock very soon, and then I could readjust that position over time as the company progresses along, and of course I can monitor it the entire way. Anyway, those are my thoughts on 3 AI sleeper stocks that, I think people are maybe not paying enough attention to because, of course, the stock prices are down, but I think they do have some quite a lot of future potential. Anyway, I'd love to hear your thoughts down below. Do you like any of these? Would you change them with anything else that might be down this year? I'd love to hear your thoughts. But thanks again for stopping by, my friends. I hope you enjoyed the video, and I will, of course, catch you in the next one. Hope you're all doing well. Take care, everybody. Bye-bye.